Hello and welcome back. My name is Josh, and today I want to talk about Poshmark. I made a video about Poshmark just about a week ago, and as you can see, my final recommendation was I think it looks really interesting, but I would wait until after earnings, and I hope you did, because the stock was actually up 6% before the earnings call, and then when the earnings call hit, you can see here down a ton. It's actually down 32% in the pre-market. Um, so I hope you waited and listened to me. This has been a crazy quarter for earnings. So just to go over what happened in the earnings call, Poshmark did miss earnings. You can see here they were expecting 82.7 million, and it came in at only 79.7 million, which is a 16% increase year over year. But because it was about 3% less than expected, um, which is not good. Like the stock shouldn't do well on missing earnings. But I don't think a 3% miss should mean a 33% drop almost in share price. So again, I thought it was an interesting looking company before. I think now I still truly believe in again, first you gotta say, do I believe in the thesis? Again, don't just buy the dip blindly. Don't say, well, the company's down, therefore I should buy it. That's a bad way of looking at it. Say, is this still a good company? Or is there something fundamentally broken about this company? I personally don't think there's anything fundamentally broken about the company. The company's still growing, maybe not as quickly as people expected. But I don't think it deserved a 33% drop in price. And not just that, you're looking at going to be an 80% drop from not where it IPO'd. It IPO'd actually at 42, immediately popped 100%, but it was priced at 42. So now you're looking at a third of what it was priced just a couple months ago. Um, so again, if you fundamentally believe in the company, I think this could be a great buying opportunity. And this gets back to my thing about, are you investing or are you trading? This is a terrible trade. You can see here, look at this trend line. It is just going down, down, down. So if you're a trader, you could have made a lot of money saying, I think it's just going to keep following this trend line down, keep following the trend line down. I'm not a trader though. I really try to look at the fundamental analysis. So I'm going to go over a bit of the fundamentals here because I've discussed in the previous video what Poshmark is and why I believe in it. I'll link to that video right here. But a brief overview. Poshmark is a social commerce platform, so it allows people to buy and sell used clothing, and now they're also uh, allowing brands to sell on there as well. And again, they're combining social with e-commerce. This is huge in China. China has a massive social commerce. Um, they sell tons through social commerce. Here in Canada, the US, we're much behind. So, but Poshmark is kind of leading the way. So I think that they're going to be one of the main beneficiaries as we start shifting towards there too. So, and again, watch the video um, if you want to see the full breakdown. So, Poshmark again. Let's do our quick analysis here. So after it was 1.87 billion, but it's down 33%. So that means it's about 1.3 um, billion-dollar market cap. If we look at the trailing 12 months, from here we have the trailing 9 months, and they just got $80 million last quarter, and they're projecting 80 million for next quarter. So I'm just adding that in. And when you add in 80 million for next year, you're basically going to say full year, trailing 12 months is $0.322 million in revenue. When you take that with an exit multiple of 20, here's the chart we get. And if we look at Poshmark, I actually looked at it compared to eBay because they have very similar. They have a short history, but gross margins for Poshmark are between 87 over 85. eBay actually a little lower. They're in the mid 70s. But their operating margin is 22 to 25. And for Poshmark, again, short history, so it could change, but mid 20s too. So I think these are comparable companies. They're both marketplaces where people sell items, clothes, and other things. Poshmark typically sells clothes, but they're getting into other things like pets. So again, very similar dynamics and business models. So that's why I think they're comparable companies in terms of what their margins could be. So again, mid 20s is a reasonable assumption. I actually think it could be higher. Right now, it's at 22-ish. And we see here, if we see a 22 margin, again, I always try to say, what's the downside scenario? So what do I need to do just to basically make the market? And you basically need to see about 5% growth over the next 5 to 10 years. So again, last year they grew 16%. And, you know, so I think 5% is very reasonable. And actually, if we look at what the analysts are projecting for next year, Yahoo, Posh, analyst, we see there, so 330 is current year, what did I write? 322. So I actually said a little lower. They did miss earnings, and I'm saying they're going to pull back a little. Next year, they're projecting 418, let's call it 418. So what's 418 over 330? 330. They're projecting about 26% revenue growth, which matches up what Finbox has here. They're also projecting 26. Now they're actually projecting what I think are quite high numbers. This is also the stock price from before the dip. Otherwise, you'd see much higher upside. But even if we pull back and we say, okay, I think they're only going to grow 20%, then 15%, then 7%, then 5%, then 2%. It says it's down here, and these are very conservative numbers. You saw I pulled back a ton, but 20 is still it's still higher, even with these extremely conservative numbers, than the projection of what the current stock price is, which is after the drop, it's at 16.5. So you're still talking a 33% undervalue-ish, 27 more like it. So again, I pulled my numbers way back, was extremely conservative, and yet you still see that this stock is undervalued. So I really do see this company. Again, you have to believe in the thesis. They do have to grow. There's no doubt. If they're flat, there's not going to be much. But if they have growth, and I think they will, even if it's more muted, maybe before people thought 26% growth was expected, now we think it's going to be 15-ish. But basically, if they grow anything faster than the economy, like if they're growing 5 to 6% a year, I think this stock does okay. And if they grow 10 to 15, I think it could be a triple. So I really believe in this company. I think that this company could be a really good buy on the dip. I know that once the market opens, I'll be buying the dip. And one last thing I wanted to compare was, so this is eBay's, again, because you could do price to earnings, but because these companies are very similar, I actually want to compare them on a price to sales ratio. So let's look at right here. This is 2015. This is after eBay saw their sales decline from 12 to 7. So that's like a 40% drop in sales. Their price to sales ratio was 3.27. And despite the drop, their price was pretty flat, right? The stock price didn't go down. Since then, their sales have gone from 7 to 17. So it's more than doubled. And the stock price is also more than doubled. It went from 20 to 70. Yet the price to sales basically stayed the same. It was mid threes to now it's, 4-ish. So again, the market's basically saying 4 is the right price to sale, and it's the sales that is increasing the stock price, not the multiple. So if we look at Poshmark, Poshmark currently has, here we go. Poshmark currently has this much in market cap and this much in sales. So if you divide it, it's also about a 4. So they're basically saying that currently the stock is priced the same as eBay. So any growth they experience, I would expect I don't think you'll see huge multiple expansion here. So basically you're betting on the growth of the company. So I'm betting that, if the company grows 10% a year, I think the stock will grow 10% a year. If the stock grows 7% a year, I think it'll grow 7% a year. So approximately, it's not exact, but again, we're projecting 16% growth for next year. Analysts are, 26%, and they grew 16% last year, coming off of weaker comps. Again, people actually thought maybe they'd have better comps due to COVID, but again, because they're a reseller of clothes, it's, hey, what do I want to buy if I'm stuck at home? People aren't really buying nice fancy clothes, so I think reopening will actually help them. Summer helps them too. I'm sure people want to dress nicer when you're out and about and wearing nice clothes. But yeah, the way I see Poshmark is, if they grew 12%, I think this could be a 12% compounder, approximate. Again, these are rough numbers, but really, you know, you can do all the complex math in the world and you can do a DCF and all this. Um, but if your assumptions are off by a little, it will change your numbers slightly. So really, I try to protect the downside. I just say, what has to happen for me for this to be just a mediocre investment? And if it's anything over that, then it's just pure upside. So I see this company after the stock price. Again, this is why I say you got to know valuation. You could love the company, but if you bought it up here, I think I mean, A, you did terrible, but I think it was never worth that. I'm not even sure it was worth 40. I think I said my internal price was a target was about 35-ish, maybe 30 to 35. Now we're a bit lower than that, but after this recent drop, we're less than half of that. So I could see this being a quick, easy double in a couple of years. And again, let's say you double in 3 years. Uh, to divided by 0.33, you're talking 25% compound growth then if you double in 3 years. So I really think Poshmark is an interesting company. I personally will be buying. Let me know what you think of Poshmark. Uh, do you think that they deserve to be down 33% on this? Do you use Poshmark? If so, let me know. Is there something that's fundamentally slowing the growth? Are people not liking the service as much? Again, I heard the growth, the sloth? No, that's not a word. The slowing growth was due to the Apple iOS um, uh, change as well as the supply chain. I know a lot of companies said both those things, but I think that it's becoming a trend. Snap saw a huge drop. Let's actually look at Snap real quick. Stock. They saw a pretty huge drop in their stock price, and they said, hey, supply chain issues are leading to companies not needing as much marketing because they're not selling anything because they're so backed up. And the iOS change made it so they had a tougher time tracking ads. For those who don't know the iOS thing, Apple changed um, they updated to iOS 14, and part of that is it no longer allows cookies. Cookies are things that track you on the web, and it's for privacy reasons. People might like it, but for companies, it makes it much harder to track the effectiveness of their marketing on mobile. And so a lot of companies said, hey, this is significantly, uh, we didn't want to spend a ton of money when we're not sure about the impact. So we're going to slowly ramp back marketing. So this has hurt a lot of e-commerce companies, both the supply chain issues and the iOS thing. So you've seen a lot of companies hit by this. So it's not just Poshmark, but I do think that these companies will adapt. I think they will get back to where they were. So I'm a big believer that I'm a big believer in Poshmark. Again, this isn't about Snap, but I just want to say that these two reasons are are affecting other companies, not just Posh. Again, if it was something that every company was doing well, but Posh was doing terrible, that might be something to look into. But when this is something that's affecting the broader market, I think that those market things will even out in the long term, and that you'll see these companies will bounce back. So let me know your thoughts in the comment section below. Are you buying or selling or holding? Did you wait until the dip? And if so, or did you buy early? So let me know what you did, and thanks so much for watching. Cheers.